Okay, so before we start, right, as usual, we have to do the disclaimer first. So just be mindful that everything that is shared in today's session is purely for educational purposes and is of the speaker's own opinion. So it does not constitute to any form of trading or investment advice, lah, okay? And as usual, before you do your own trades, please do your own due diligence as well. And at any point during this session, right, if you would like to ask questions, there is this Q&A box under this menu from Zoom that you can type in, you can type your questions inside. So for this Q&A, right, there is this option that we enable the questions to be upvoted. So you can take a look at what are some of the questions that the fellow viewers are asking as well, and then you can upvote them as well if you think that is something that you are keen to get answered. Okay, so for today's session, right, is actually the first part out of this three-part series that we are running. So this is actually in collaboration with SGX on this SG Market series now, where we will be looking to share a little bit more insights on trading into Singapore stocks. And the title for tonight's session is actually Singapore stocks in the second half of 2025, riding the liquidity wave or bracing for volatility. So if you ask me, right, 2025 is actually quite a special year, I would say, for STI. Because when in the past, right, when people talk about STI or when we hear about Singapore market, I think the impression is somewhat always, we feel that Singapore is very slow moving, it's very dividend heavy and dominated by a few sectors like banking and property. But if we zoom out of STI and we take a look at the past 5 years of the Straits Times Index, basically, we noticed that after this V-shaped recovery post-COVID, the main bulk of this period from the last 5 years, and from the main bulk, I mean mainly from 2021 to the last quarter of 2024, STI has been basically consolidating. We don't see much of a volatility of movement. So basically a lot of sideways movement. But in 2025, right, we start to see a bit of like a signs of transformation, I would say. So whether it could be the rise of tech-related plays like ST Engineering, right? We see more than 70% gain in 2025. Or it could be sustainability-driven kind of investments like Sembcorp Industry, which over, I think, 30% this year. Or maybe even perhaps is the global attention that or global interest that we see more in Southeast Asia as a region for growth. Yeah. So in this session, right, I want to highlight is that we'll actually explore some of what are some of these factors driving the market and where are the risks and of course opportunities for retail traders like you and I. Okay, and how we can better position ourselves for the second half of 2025. Okay, so tonight I'm actually joined by Billy, who is the regional head of retail research, and Warren, our market strategist here at CGSI. Both of them are very experienced and have many insights to share with you. So I'll urge you guys to use this opportunity to ask your questions as well. And before we start, right, just let me share with you something very quickly as well. Okay, I'm not sure if everyone, the viewers here are aware. So actually right now, CGSI, we are running this campaign. So this campaign, how it works is that during this campaign period from the 1st June to 30th September, if you are trading in SGX stocks or ETFs, every trade that you execute that is more than 5,000 in traded value, you get at least one chance for a lucky draw, okay? And for selected stocks or ETFs, you get two chances for the lucky draw. So today is the 10th of July. We are doing the first lucky draw at the end of today's webinar. And this lucky draw that we are doing today is basically for trades that our clients made during 1st June to 30th June. So just to give you a little bit more context. Okay, so if you want to know what is the what are some of the counters that are giving you double the chance, right? Two draw entries. It's actually over here. Okay, we put it in our campaign landing page. So there's a list of tickers over here that if you are trading above $5,000 in value, you get two lucky draw chance. And those that are not here will basically receive one lucky draw chance. And this is just for SG market. So towards the end, right, we have this wheel over here. I'll be spinning the wheel. And of course, the prices is actually shown in our TNC. So just let me show you the price for today. Okay, so for today, right, we are giving out 18 lucky draw prizes. So basically, we'll go from the back. So the first 10 winners that I draw later towards the end will receive $50 cash credited into their trading account. The next 5 will basically receive $100 worth of Capital Land and more e-vouchers. And the top 3 prize today we're giving out is a Galaxy Watch 7, iPad Air, and iPhone 16. Okay. And I already see one question on the lucky draw. Sell transaction count for the draw? Yes, it counts for the draw. So meaning to say, if you are buying $5,000, you get 1 chance. If you sell the $5,000, meaning you sell the open position, you close your trade, you get 1 more chance as well. But of course, if you are trading any of these listed counters in this Appendix B, right, and instead of just 2 chances, you get 4 chances. You get double the chance. Okay, and we'll do the draw towards the end after the Q&A. Okay, if not, I don't want to take too much time. I just wanted to highlight that we are running this campaign right now. So if you're not aware, then there is still time for you, because right now it's just 10 July. And from the 1st July to 31st July, right, you can also trade SGX listed products to participate in this draw. And we'll do the draw as well, similar to the end of today's session, but we'll do in the next one on August 7th. Okay, so this is the webinar date. So the invites, we haven't sent it out yet. So just look out for our email. Okay. If not, I would like to pass the time over to our first speaker, Billy. I think I talked a bit too much on the campaign already. So, Billy, please.
Right. Hey, thank you, Ethan. Thank you for your presentation. It's very comprehensive. Actually, I'm a bit excited also tonight because got the lucky draw. And if I know, I wonder staff will get it or not. Okay. All right. I think first of all, I think today the topic is on riding the liquidity wave or bracing for volatility. I guess we had a roller coaster ride during the first half of 2025, but the Singapore market has performed quite significantly better than regional peers in the first half of 2025. So a lot of investors probably going to ask, what's next? Is it the time to take profit, or is it still a good time to buy into the market and stuff like that? So we'll look at first look into some of the key reasons, key drivers for some of the movement in the markets. And of course, we'll look at some thematics that we are expecting in the second half. And then, of course, some key risks to take note of as well before I pass the time to Varian to look into technicals. All right. So this is just a disclaimer. I think Ethan has already covered that. All right, so just look at the global market first. If you can look at here, the table here, this is basically looking at the different markets. You can see US actually is not doing as well as the rest of the market. If you look at during the first half of 2025 here, you can see that the US market is performing between 4 to 6%, the first half, the total return, but Europe is gaining between 6 to 20%. The German DAX is at 20%. And then in Asia, you can see it's quite diverse. Of course, the MSCI Singapore is doing very well, 12.4% total return in the first half. And then if you look at South Korea is also doing very well, close to 30%. Hong Kong has seen a strong recovery during this year at 22%. So you can look at it and compare with the 10-year total return, right? Or the 5-year total return. You can see prior to this, a lot of dominance in terms of growth is coming from the US portion. But this year is where we see some of the rotations away from US per se, and we'll look into some of the reasons for that. One of it, of course, is valuation gap. The S&P 500 is trading at a significantly higher level than, for example, the Euro stocks. And of course, I've addressed the best performing market here. And if you look at the next slide here, you can see that there are 4 key thematics that have been driving the market away from US. One of it, of course, the biggest one is the weakening of the dollar. This year, the dollar index dropped close to 11%. It's the worst since 1973, mainly due to the confidence in the dollar that faded, partly due to Trump. I think there's a lot of concern on the US fiscal deficit that's widening as well. So this has support some of the flows into global assets. Of course, the taco trade and global wake-up call. I think Trump tariffs has allowed investors to see the instability in the US policy at this current moment. So instead of having diversification as a second alternative, diversification become a priority. So a lot of rotation away from that. And of course, we have the global AI renaissance. I think investors are also aware that AI growth is globally distributed. There are emerging tech hubs in Southeast Asia and in Asia as well. So investors are looking into opportunities at that come at a value that's more attractive. Of course, I mentioned earlier, valuation gaps are too wide to ignore. Hang Seng has grown by 40, Hong Kong Hang Seng has grown by 42, I think. Sorry, this is a typo. Yeah, not 40, 20 plus percent. That's about sorry, I think sorry, this is a 1 year total return, yeah. About 42% over the last 1 year, but it's still undervalued if you compare to the S&P 500. So that premium at this current level is not really justified due to some of the uncertainty in the US policy. So look at Singapore market specifically. I think the Singapore market outperformed its ASEAN peers in the first half of 2025. The total return of the MSCI Singapore is at about 12.4%. The MSCI ASEAN total return is only at about 6%. So this outperformance is driven Sing dollar. And of course, the attractive yield of around 4.4%. And our valuation in Singapore remains attractive, supported by earnings growth. And of course, the temporary tariff truce that we saw after the Liberation Day. So there is a recovery in most markets, as you have seen in the earlier tables, including Singapore. Now, of course, Singapore has an additional catalyst, and I think this is a structural benefit or structural growth for Singapore going forward. The Equity Market Development Program, the EMDP, which will serve as a liquidity catalyst. I'll talk more about that later on. Now, if you look at the wider market, aside from just the index itself, right? This is basically the entire Singapore market. So more than 50% or 53.3% of the companies listed on the Singapore market actually reported gain in the first half. Only 40+% is at losses. I think about close to 4 to 5% is unchanged. So this shows that the market is resilient. And if you look at the next sector, you can see some of the leaders, which is your financials and industrials, leading at 12.740%. And then you can see that this is rallying on strong earnings and stable rates. If you look at energy, gain about 12.2% gain. This is due to the commodity prices as well as the green transition trends in Singapore. Utilities and telcos are the only sectors that are lagging due to inflationary and cost pressure, while the REITs stay resilient with about 2% return despite the slower than expected rate cuts. Now, I'll go through some of the top gainers in the market based on the different market cap levels. So this is the first one, the mega cap, those with 10 billion market cap and above. So you can see ST Engineering is the leader here. And it is basically reflective of the strong defense contract and smart mobility investment. So if you've been following our research, you will see that ST Engineering is also one of our topics. And I think Suki is covering that. Then, of course, Sembcorp Industries and Keppel also saw strong momentum during the first half due to clean energy adoption and restructuring strategies. Then you saw Hong Kong Land Holdings surge on potential recovery in the property market as interest rates fall and market sentiment rebounds. Now, only 3 stocks with more than 3 billion market cap in Singapore reported a negative total return in the first half, which is Wilmar, IHH, and Thai Bev. Wilmar is mainly due to the legal issues that they are facing in Indonesia. And of course, Thai Beverage is partly due to the slow demand, especially in Thailand and in Vietnam. So for the big cap, those that has market cap above 1 billion but less than 10 billion, I think if you look at it, Yang Zhejiang Financial Holding is leading with 87.2%. This is mainly due to the news of a potential spin-off for its maritime investment business, which will also be listed on the SGX. So that news has actually caused a rally in the share price. And now, of course, your Hong Leong Asia is a building materials company, so it's a gain about 80.8%. This is mainly due to the Singapore's construction market upcycle and the construction of several rail networks in Malaysia. In fact, if you look at the construction sector in Singapore, a lot of them has done pretty well. Then, of course, we have Centurion as well. There is a strong dormitory demand, capacity expansion, and of course, the news on the potential asset monetization via its REIT listing. SIA Engineering is also another one. I think they saw a strong return following the positive news contract agreement with SIA and Scoot as well. In terms of those with small to mid cap, those with above 100 million but less than 1 billion market cap. So you can see that I put a bit more stocks here, about 20 of them. So you can see OKP Holdings is leading, Takrao for Empire, So we don't cover all of them, but these are some of the stocks that we've covered. So just going to highlight some of them. So for example, Food Empire, mainly because of the resilient consumer play with strong margins, growing demand in emerging markets. So prior to this, I think Food Empire has a lot of business from Russia, but there's a growing business in Vietnam and India that has helped to sort of sustain the earnings. So then we have Q&M Dental. There's a lot of optimism surrounding its proposed secondary listing in Malaysia, and of course the expected earnings boost from the consolidation of Axin and its profitable AI subsidiary. Oitech International also saw a strong return. If you look at it, Oitech gained about 60.5%. I think this is on the news that it will transfer to SGX mainboard. I think it's already transferred to the mainboard now lah. Then you have your Pan United Corp Limited. I think it gained about close to 60%. This is again benefited from the construction activities that are on an up cycle. Then we have LHN Limited. I think analysts just started initiate coverage on this company. So there is a compelling growth story on this company with strong earnings visibility from its fast expanding core living brand, Colivu. So if you are in Singapore, you probably realize there's quite a bit of core living spaces that are targeted for EP workers and expats. So Colivu is one of the most prominent brand in this space. All right. Earlier I talked about the EMDP, right? The Equity Market Development Program. So will it be a game changer? I think this will be one of the thematics that we're looking at in the second half. This is basically the mass proposed 5 billion, which is used for to target on the mid-cap sectors. I think those I think during one of the speech, they mentioned that it will be targeting those with 500 million to 3 billion market cap. So they are looking at beyond just the STI index members. So the fund disbursement is expected to begin by the third quarter of this year. So EMDP aims to boost liquidity. I think that's very important. A lot of times people talk about Singapore market. One of the things that's lacking is excitement. So I think with some of the liquidity, they will drive a bit more interest and activities in the market. So this also will look into expanding research coverage to allow more exposure to investors so that retail investors will have more understanding of companies that are less exposed to them. And of course, making SGX more attractive for IPOs. So I think we just have one IPO this year. Just I think our company was one of the underwriters as well. All right. Before I jump into the thematics, let's just look a bit on the economic outlook on the second half. I think one of the key concerns is Trump tariffs, and I think this is what we need to look at before we look at the thematics. And what we are looking at is a softer growth ahead. So we actually cut our GDP growth earlier this year to 1.6%. This is slower than the 5% in 2024, but it's in line with MTI's 0 to 2% forecast range. So growth is really going to be supported by electronics manufacturing, but this will moderate in the second half, partly as I mentioned earlier, Trump's tariffs, and of course the slower external demand recovery. So I know that Singapore is, although it's not confirmed yet, but I think at this point, Singapore is likely to remain at the 10% tariff level. But even at that level, because Singapore is a trading nation, so if let's say tariffs will remain high for other ASEAN region, so this will actually affect the overall growth in the second half as well. So if you look at the recent global PMI data, it also suggests that the emerging markets driving growth, but look at developed markets as well as Singapore PMI have actually slowed down a bit. So you can see from the chart here, the red color is basically the Singapore PMI. In terms of the front loading that we have seen, Nordex growth forecasted for the year is at 3.3%. So this is basically thanks to the earlier surge in terms of electronic and of course festive go exports a lot on that front. The April 2025 Nordex was up by 12.4% year on year, and we have a record trade balance of 11.6 billion in April. But having said that, the risk in the second half is the front loading when it fades, so that will likely to see a sharp slowdown. And then of course there's a persistent uncertainty in terms of the US tariffs on electronics and pharma. So at the moment, I think these two are not included, but Trump has consistently said that these two will be part of the tariff eventually. So we still have, currently because it's not effective yet, so this sort of still supports short-term demand, but there's not much clarity going forward. So this will affect in terms of business planning for some of the listed co as well. So in terms of inflation, I think headline CPI is expected to fall to 1.5% this year compared to 2.4% last year. We have seen cooling inflation across globally, not just in Singapore. I think the high inflation level might have over, but of course there is a concern on how tariff will affect the inflation, especially in US. So the sticky COE premiums continue to pressure the transport costs. Core CPI has remained subdued at about 0.7% year on year in April. So going forward, we expect the MAS policy outlook to ease further. I think there is a bit of wiggle room for the MAS to ease further if there's a need for it. So in terms of some of the strategic themes for our clients or for retail investors going forward in the second half. So I think we look at selective big cap exposure. I think investors are rotating into large big cap names with resilient earnings, strong balance sheets, and leadership in their sectors as safe haven in an uncertain macro backdrop. So I think I talked about EMDP earlier. So there is a lot of maybe a lot of interest in mid cap and small cap. But having said that, because we have so much uncertainty on the global front and on the macro front, so most likely investors will still position into some of the large big cap names in Singapore, which are known to be more resilient, not just in their earnings, their share price, the dividend as well. So investors are likely to park their money on some of these big cap names, especially if the market becomes more uncertain and more volatile. So then there is also the thematics is the liquidity inflow from EMDP. So we expect this to attract more investors to look into Singapore market, especially with improved liquidity. So this should support near-term price momentum as well. So then there's also the defense play. We do think that defensive sectors like the consumer staples and dividend yielding REITs remain attractive for income and stability, especially as investors brave for a slower global growth and potential rate cuts in the second half of the year. Now, some of the key sectors in focus and featured stock ideas. I think the key sectors that we will focus in are areas that have strong earnings visibility, thematic tailwinds, and or strategic activities. So, for example, capital goods, we do believe that supported by strong order books, infrastructure spending, and higher for longer capex cycle. Consumer, we believe that they will benefit from the tourism recovery and ASEAN consumption resilience. Construction, I think government infrastructure push and private sector project backlog should help to support. Gaming, we do think that tourism-linked rebound and stable domestic demand will help to support the sector. For healthcare, demographic tailwinds and expansion into AI and overseas market. REITs, as I mentioned earlier, we do think that the yield is attractive, especially when you compare with the rest of the market. And of course, Singapore REITs, a lot of them do have a resilient property portfolio, especially those that have a large base within the Singapore market. In terms of some of the stock ideas that we are looking at, so you look at large cap stocks. So we have 5 ideas. So these are some of our high conviction stocks. So for example, Keppel Corp, we do think that they are targeting the 1 billion in asset monetization and 80% recurring earning mix. So ROE uplift remain in focus. SATS, I think SATS has not done so well in the first half, but air cargo recovery remains in play. And we do think that there will be a recovery in the second half of this year. Sembcorp Industries, I think the interest is still there in terms of the expanding renewable portfolio in Asia. SIA Engineering, we've talked about it earlier as well. They will still benefit from the aviation recovery and of course the higher aircraft utilizations. UL Group, earlier I did not mention them, but the redevelopment of Marina Square and Clifton Center will help to enhance recurring income. So this is also another one that is on our stock list. In terms of the small caps, so we have identified some of them. So you can see from here, Food Empire, I think it's done very well earlier. We talked about it. Franken, we do think that they will leverage on diversified exposure across semi, medicals, and industrial, better for recovery positioning. But of course, I think this is also subject to how the impact of the tariff on these companies. Pan United, I think mentioned earlier as well, strong infrastructure pipeline in Singapore will help to support share price level. Q&M Dental, we also mentioned that. LHN, we also mentioned that. I think BRC Asia, backed by robust construction demand and infrastructure rollout in Singapore. CSC Global also benefit from public and private energy and infrastructure projects. Propnex, I think later on, Wayron will also highlight some of these stocks as well in terms of the technical side. So for Propnex, they have strong resale and rental market activity. So they are leading market share in terms of the Singapore property segment. So we do think that they will be one of the picks for the small cap, especially with the EMDP. For the Marco Polo Marine, it's an undervalued offshore proxy with fleet expansion and rising charter rates. Again, some of these stocks I mentioned, we have not highlighted, we have not take into consideration how the impact of the tariffs, because at this point there's too much uncertainties on that to price into our selections. So I think that's it from me. I will pass the time to Viren. Viren, over to you.
All right. Very much good evening to everyone of you. First of all, thank you, BD. Just give me my time. Need some more time. Okay, so basically, I think Billy did a very good job on on talking about the how's the region doing and then comparing and stuff like this. So for this, I think there are a lot of technicals and momentums that suggest what Billy has been has mentioned. So from now, I will just take the rest of the remaining time to go through it on how the momentum of the Singapore stocks basically the SCI top 30, and then I have some stock ideas that I did in the past, and then you guys can actually look at it. All right, so first up, I think you look at the first, the top 14 caps of the SDI. So for the SDR, you can see that the banks still remain still remain on the uptrend, but momentum has gone to some sort of up but neutral zone on this. So overbought, not quite yet at the moment. So it's if you see that it's overbought, but basically that you are using the default setting. But for me is I use more of midterm elongated kind of periods and larger number to get the best of the best numbers. All right, volume wise, I think for over the past period of 3 months, remain very neutral. So based on all this plus some price action, I have some sort of a score system. So I think for the bullishness and bullish sentiment, remains 7 on DBS, OCBC, and UOB. By one dive down, I think DBS will be the strongest one, followed by UOB and then OCBC. But OCBC may likely be overtaking after the Great Eastern privatization actually didn't go through successfully. All right, for Singtel, I think the price today is 401. So this price of yesterday. So I didn't really get a chance to update. But trend still bullish. But I think one to highlight is main thing is overbought and then neutral. Despite a very strong break over $4, I don't think it will sustain. I think basically I think $4.04 that region, we might see a stronger than expected correction on that. The one of the strongest one will be Singapore Exchange, 15.41. I think all of this, I think I give a score of 8. All right, REITs, I think will be slightly weaker due to overbought and weaker volume, but trend and momentum wise remain on the upside, neutral on the directional movement index. All right, STE, I think just now BD says mention about it, caught my ear. It's a leader. True enough, but I think that yesterday when it hit 8.24, it actually corrected. So it's quite bullish neutral, overbought. So I give a 6. I thought of initially it was 5, but some of the discretionary pressure I bumped it up to 6. Reason being because I don't think the correction will be that strong. That strong. And after that I will show you in the chart as well. All right. The US, I think Yangtze shipbuilding still maintain. I think it's building up. I think give it some time. I think we are likely to see a break above going forward. Semco industry strong and Hong Kong land is strong. All right, weakest one will be on Wilmar actually. Kind of like the bearish. Though there's some rebound at $2.92, but I think that Wilmar still remain very weak on this. All right, best UOL group is coming back. I give a 9, and then venture strong. Is slowly building up. I think short term we could see a $12 going forward on this. All right, compared to, and then for the consumer, compared to Sheng Siong and DFI, chart wise, I think Sheng Siong quite overdone. Might see a pullback, and then the risk to reward not very fantastic, but DFI we do see a very strong run beyond $3. Once it break $3, we are likely to see a very strong action going forward. All right, now I'm going to go through the MSCI Singapore. So not SDI. Why? Because MSCI actually have grab and see in their weightage. So it'll be much more of a stringent outlook. So despite the stringent outlook, the risk balancing that it occurs, the MSCI still manage to outperform. All right, so you can see that the MSCI actually has broken out above the 300 and then 400 psychological level. Now this support zone is averaging stronger. All right, you can see that ever since I think for a few this year, it has really sustained above the symmetrical triangle. So we are likely to see a break above 423. That's our near midterm target. And then 442 estimated by mid 2026, we could see that level reaching up. All right, so for 2 years, if everything goes well, even there's a sharp correction, I think it's likely to support 350, and then it's going to bring up to beyond 465 going forward. I think it could actually see 481. So translated into the SDR, I think SDR has already made new high. And then so it's likely to propel the market further as long as it's sustained over 4,000. All right, so for the daily chart, I think momentum still relatively strong. You see strong uptrend, breaking out above multi resistance level at 400, 399 to 400 levels. So and recent break above this falling wedge has proven to be strong. I think by tomorrow, I think we are likely to see a new high, reaching around 422 before a correction down. All right, so in any event of correction, I think major support still remain at 395. What is a major support? I think there's a level that majority of the traders are looking to watch out for. But near term wise, I think if you look at the momentum indicators from long short to long medium and short term, we can see that all are going flat and then decreasing slightly. So any upside is likely to not last in the near term and then may just correct and then find support 395 before going on the upside again. Okay, so first up, I think this you can scan this for past report for this, so for some purpose. So while I explain, you can just flag out a phone and then scan this if you're using a PC. If not, I think you can just use another phone to just scan it. All right, but I want to touch on DFI. Okay, so as I mentioned earlier, part of the webinar, I think DFI is looking at a very strong uptrend channel, and it's in the early stage. All right, after CEO change, and then after March, it make a double bottom over here, and then it just go straight up. Buying pressure wasn't fantastic at the top, but recently we could see some buying pressure picking up, and then nearly touch $3. So given the fact that there's a potential that it might break $3, we are likely looking at a target on 308, and then that's our short-term target, and then roughly around 360 will be our major target going forward on this. All right, things to note, I think long-term momentum still remains strong, but short-term momentum, mid-term momentum flat, and then recent short-term momentum, despite the 23 period ROC remain above the zero line, but we can see that there's a bit of declining momentum and volume. So maybe we could see some slight pullback before attempting higher. That's a possibility chance. So where's the support? We'll look at 270 and lower support at $2.61 or even lower at 250. So these are the levels that you can watch out for an potential rebound. Okay, so next one, I think Sheng Siong. I think Sheng Siong has already finally broke $2. I think from the part last year, August, it has been building up and then range for a whole period of time since November until March. And then you can see on the upside again. So if you give a gradient slope, I think Sheng Siong is quite parabolic. I think we have reached our second TP of $2. Break slightly and then corrected. So I think the near-term correction will likely to go on. As you can see, the short-term momentum as actually goes up on this as well. So I think $1.94 will be a strong level to watch for a rebound, or even lower at $1.86 and to $1.83. $1.90 will be a median support level to watch out for going forward. Right. So any question, just put this the Q&A, and then we shall see it going forward. All right. And then you can actually upvote it on the Q&A, so that we will pick up the best Q&A on this as well. All right, Capital Corp, one of my favorite. I think you can see the corrective structural pattern. You can A and B. I think there's some changes because after that there's some sort of adjustment for dividends. So you can see that this larger A, B, and C structure of the Elliott wave. We like to see a strong break above. We have already seen a strong break above this line. I think $7. So it has sustained well, and I think that it could edge out higher beyond $8. But I think that the momentum is going to come down slightly weaker once it hit $8. Reason being because we can see that flat stochastic potentially if prices don't hold, stochastic turn down, and then this will lead to the short-term trade period ROC to actually turn down as well. You can see a volume has been on the low side, so there's a possibility that once it hit $8 or to $8.03, it might just correct. But I think correction likely to be mild. Like to see some support at $7.33 and $7 as a maximum support level going forward. All right, so Banyan Tree is taking a breather. I think Banyan Tree, I think after the what do you call it, the Mandai Hotel, did well. Kudos to Ho Kopin. I think he was very happy that his stock is running right now after ever since the COVID period. So I think 60 cents was our first target price, key already. So likely we'll see a correction down after a strong parabolic rise to the top again. Likely look at 47 cents and 51 cents as a key level support. 48 cents also will be a key level to watch for a rebound. So far all momentum are strong. If you ask me a score, roughly I may estimate a guess without any calculation right now. I'll give an estimated 8 to 9 for this. 8 being there's a potential correction, but 9 being the fact that correction will be mild, likely to see a rebound at 48 cents or even higher. All right, SCI Semcon industry very strong. I think see a target of $8 as well, same as Capricorn. But I think that so far momentum over the midterm is flat, but you can see a short and long term seeing a steady climb. And then DMI is strong as well, picking up. Volume remain recently just go to a low today, so we might see some slight correction or consolidation. But I think everything on the upside will be at $8 going forward as well. All right. Okay, so SD engineering is the one that I foresee a correction down. I think stocks are flowing. If you talk about sector rotation, fund flow, I think because SDE there's some sort of like overbought this my long-term MACD, and then it just turned negative actually. So declining momentum after there's a evening star pattern, a small one. So likely to see push ST engineering to a correction to the downside again. Looking at a support of $7 going forward. So prices, I think there's a rotation into DFI. Sheng Siong, don't touch it. All right, for now. Okay. Okay, WeHer, I think I'll go into a small cap. I think WeHer very strong. I think you can see that 0.46 has been tested multiple times, weakened it, and then it has broken up. We can see that from February this year, you can see a higher high and higher low. You can see a very strong uptrend internally. It has been happening for the past 4 months, going to 5 months soon. So it's definitely a strong uptrend. So I think I foresee a target of 60 cents in the near term, 62 cents to be exact, 90 cents over the long term. Construction will be in play. I think Billy has mentioned it just now. All right. Okay, I think this micro small cap Hawk Lansing, I think very strong momentum. I like all the discretionary momentum, including volume is very strong. I think today I think it just closed out above. So I think we'll be looking at 82 cents, our short to midterm target, 98 cents or $1 will be our long-term target going forward as well. Okay, Lei Chun, very strong. Broke up and then forming a higher high, higher low. Though short-term momentum is falling, but I think that volume is supported. So I think likely to break above the target of 82. This 0.07 cents. Typo over here is actually 0.08 and 0.09 over here. Apologies for that. Okay, prop next, I think given the fact that on the macro backdrop, I think we'll see a possible on this or a possible upside. I think we're looking at 161.8. I think we shouldn't be seeing a correction, and we see that the MACD has turned back. All right, everything's up. So I think we could see further upside pricing. So on the stories, I think HGB prices is likely to go up. There will be more transaction in the residential property. So prop next likely to be good. So if you want cheaper valuation, cheaper alternative, you can look at CLN. That will be APAC Realty, the one that own ERA. All right. Okay, so I think we have two more. Will be on Singapore Exchange. Needless to say, I think the value up thing and the MAS plan. I think this will generally propel into the Singapore Exchange, just like how the Hong Kong IPO has already helped Hong Kong Exchange ticker code 388 to actually go into beyond the 400 Hong Kong dollars. So same thing. I think SGX has been on a low $9, $10 previously last year in July. Once it break the $10 mark and subsequently $12 mark, we can see that SGX is likely to return back to the $18 mark over the longer term. In fact, our analysts also upgraded the target to $18. Just that I have more 80 cents more, just to yeah. Okay, lastly, DBS long-term play. I think resistance slightly weakened after multiple testing, so likely to see a very strong break upside. So I think DBS over long term could go into a $50 outlook on this. So I think that once it goes there, I think it just need time. It's just that momentum right now is a bit flat on the side, but given the price action, we are looking at a very strong upside again. All right, so that's all for my sharing. So I will just take some time to answer some of Q&A. If you don't mind, I will just go into the I will just use the live screen on this. So let me just okay. So I think I'll look at. I think you can see my screen. I think let's see Wilma. If you see Wilma. I think Wilma is looking at possibly recovery. I think very much range bound over here. Can see that actually apologies earlier. I thought that it actually rebounded at this level at $2.92. In fact, it actually rebounded lower at $2.87. But you can see that recovery is slow so far. No overbought signal yet. So we are looking at a potential range bound or even lower to $2.85. So you ask me a recovery, high chance there is no recovery at all right now. All right, so Angela asked also outlook on hospitality rate, as long as a single one was mentioned on technical momentum at a glance. I think hospitality rate, I still prefer the biggest rate, like those CICT, FCT. This will be my my best pick. For REITs, I tend to stay with it on the high on the strong side. So you can see that CICT after adjusted for dividend, can see that it's sustained above $2. Very strong uptrend. So I think we are likely to see a break to the upside again. So I will stay with the retail based REITs for now. Okay, I hope that answered your question as well. So I think Billy also want to answer a question also. So I think there's other question. I think long-term price target of CSE global, all this not okay. Okay, let's look at CSE global. Okay, so CSE Global has, you can see from a technical perspective, everything momentum is up. So far no overbought, but it's sky high prices. In fact, it just exceeded my target of 60 cents. So likely to see a pullback towards around 56 cents before attempting a rebound. All right, volume has been okay, but you can see DMI is starting to drop. So likely to see some mild correction. So if for the next 1 to 2 weeks there's a mild correction, I think we could see a target of maybe 75 cents going forward. Okay, so William asks, what's the outlook for Franken, UMS, and Food Empire? These three very good. All right, it's a very strong uptrend. Personally, I like Franken and UMS. Food Empire is good. I think Billy just mentioned that how strong Food Empire is, but I can't remember on this. All right, okay, on this as well. Okay, so that's all for my technical front. I think the rest are for Billy. So shall pass my time to Billy for the Q&A. Billy, to you, thank you.
Yeah, just on the CSE Global, I think we also have a report on that. I think Suki has a target price of 68 cents. So yeah, so that's the one on the longer term target price, I think. All right, in terms of the US, I think a lot of it depends on the Trump tariffs. I guess that's one of it that we have to take into consideration. But you're right when you say the valuation is on the high side. Let me just share my screen a bit. Give me a sec. I'm looking for my okay. Okay. Can you see this? Right. So I think from a valuation perspective, it is expensive because if you look at P wise, it is trading not too far off from it's higher than its 5-year and 10-year average as well. So of course the highest over the last 2 decades at 33.3 level, but it's not there yet, but it's already higher than its 5 and 10-year average. So in terms of P wise, it's already expensive. But in terms of market sentiment, you're right to say that it's still positive. But if you look at comparing US with other markets, US has not been doing as well as other markets. This shows that there is a rotation away from US. But I think over the last decade, we have seen a lot of pullback in the market, and then so I think there's a lot of investors who believe that, for example, a lot of will not be implemented. So the taco trade is very much still in play. So it's why we are seeing this. So I think it depends on how the tariff is going to take place and if it affects earnings, because valuation is already at this level. If earnings do not deliver, then we will definitely see a collapse in some of the share prices, especially expectations are pretty high for most of the tech companies as well. In terms of outlook for, I think Wei-Ren will answer that. Probability of stock market correction I think is similar to what we've talked about. I think it moves depends on what Trump's gonna announce in terms of the tariffs. If there is no tariffs, I think the US recovery play will remain because I think a lot of the structural growth story is very much intact. I think the deregulation in US, the tax cut and all that are really beneficial to the US companies. But of course, if tariffs were to impact in terms of demand and affect earnings, then we will definitely see a slowdown in terms of the share prices for the S&P 500. Yeah. I think that's all from us. Maybe, yeah, I think it's just about nice that we can pass it back to Zhen for the thing that you guys are waiting for, right? I think.
Okay. Yep.
Next.
Hey.
By the way,
thanks, Billy. Thanks, everyone.
staff and title.
Sorry?
Staff and title for this.
Oh, no, staff not entitled. Yeah, so maybe then
cannot staff not entitled. Okay, never mind lah.
Yeah.
I think there's one participant I think was asking about this also. He just PM me. So maybe you just want to share about the lucky draw again.
Okay.
Thank you.
So for those who joined the session late, I just want to highlight that today is the first part of part 1 out of 3 of this SGX market series that we'll be hosting. So the dates for these sessions today will be the 10th July. So we are actually doing one of the lucky draw today. The next session will be held on 7 August. So just look out for our email invites. And of course, the last webinar will be on 11th of September for the August draw. And in October, we will have this grand draw that will be holding it at SGX Auditorium. That will be somewhere on the 9th of October. So just look out for the invites to these events. Okay, so just to recap again for those for the benefit of those who joined us a little bit later today. So currently right now, CGSI, we are running this campaign whereby if you are trading in SG stocks or SGX listed products, you're actually entitled 1 lucky draw chance if your trade is more than the value of $5,000. So what it means here is that if you enter a buy trade in any SGX listed stocks or ETFs of more than $5,000, you get 1 draw chance. If you exit the same trade, means you buy and then you close off the same trade, you get 2 chance. Okay, so buy is considered 1, sell is considered 1 as well. So there are certain counters that gives you double the draw chance, which is over here, 2 and 3 chances for selected. So how do you know which one is selected? Basically, just click on this. Okay, so I realize you may not know how to get to this page. So just let me give you a very quick way to find this page. So all you need to do is just go to Google CGSI Singapore. Okay, so once you go to CGSI Singapore, right, just click on the first link. So this is our homepage. Okay, so over here at our homepage, right, let me just guide you. Over here, there is this latest highlight. If you click on it, there is this campaigns. Okay, so if you click on latest highlight, you click on campaigns, and then you will be able to see what are some of the campaigns you are running right now. So today, the one that we are focusing on is this one, but we actually have some other campaigns as well, such as CDP share transfer or even trading in some of our ETFs as well. Okay, so if you click on this this campaign, that will be the page that I shared earlier on. So right now, right, over here, if you go into the TNC, you'll be able to see that the price that we are going to draw today, right, is actually this 18. Okay, so 10 winners that we'll draw first will be on $50 cash credited into the trading account. We have 5 winners who will be winning this $100 Capital Land e-vouchers. The third prize will be for this Galaxy Watch. And then the second prize is the iPad Air. And of course, for today, for the first prize, we have the iPhone 16. Okay, so how it works is that every month we will collate the trades from our clients who met all these requirements, and then we put it into a wheel over here. Okay, so of course, if you are you're more active, you trade a little bit more, you stand a higher chance per se to win one out of these 18 prizes. Okay, and of course, let's say if you already won, if I have already drawn your name earlier, we'll remove you from the rest of this draw which is for today okay. So just let me prepare. Okay, so just let me put it to full screen and we will do the draw right now. Okay, so for the first one, right, the first 10 draws that we are doing will be for $50. So these $50 are credited to the to your account. So how you will be notified is that we will email you because over here you notice that your names and your account numbers are partly censored okay, for client confidentiality reasons. So just let me spin the first one. Okay, so for $50 credited into the trading account. Okay, so we have GateQ. Just give me 1 second to record this name. Okay, so congratulations. We will email you again on you winning this. And we'll move on to the next client who will be receiving $50 as well. Okay, let's see. So we have the next one. It's okay, ending with Eng Tong, account number ending with 1606. So congrats, you'll be receiving 50 as well. So I'll just be removing you from this view so others stand a chance as well. And let's go to the next one. Okay. Okay, so the next client we have is Missy, so ending with account number 1735. Okay, let's remove Missy as well. Sorry, again, pardon my cough. A little bit under the weather. And for the next $50, okay, we have Mimi, account number ending with 1576. Okay, so this is the 5th one who will be receiving $50 from us. So the next winner we have okay, so Wee Heng, account number ending with 8577. So that's $50 cash will be going into your trading account. So let me just remove you and spin again. All right, so the next winner we have is Yen Bin. Account number ending with 1168. Okay, so for $50, we got 4 more to go. So just let me quickly finish up this 4. Okay, so the next winner for $50, we have Anthony. Account number ending with 0847. Just let me record that down. Okay. And let me hide Anthony again from this current draw. Okay, let me spin it again for the next $50. Okay, we have I Feng ending with 8615. Okay, so just 2 more to go for the $50, and then we'll move on to the $100 and the top 3 prizes. So just bear with me for the last 2. Oh, okay, so Tan Hyuk ending with 3805. Congrats, just wait for our email to update you. And the last $50 that we have for this particular webinar's draw. Okay, so Hogin ending with account number ending 4767. Okay, so the next one that we are going to spin will be 1 level up already lah. Okay, so the next 5 in fact will be receiving, instead of 50, $100 CapitaLand Mall e-vouchers now. Okay, so the next one, the first one to receive the $100 CapitaLand. Okay, we have Yok Lian. Okay, account number ending with 5037. Okay, so last 4 for $100 CapitaLand Mall vouchers. So once again, just to highlight, we will email you if you have won, so you'll be receiving an email. So the reason why we do it at the end of the webinar is because we want to be transparent as well. Okay, so everyone stands a chance. So the next one for the 100, we have Ong Bing with account number ending with 5779. Just let me record this down. All right, so let me see how many more we have. 1, 2, 3. Okay, 3 more for the $100 CapitaLand Mall vouchers. Okay, so we have Sarah. Okay, account number ending 9937. Okay, so congrats. The last 2 for $100 CapitaLand Mall. Okay, so for the last $200, we have Chok Ju. Okay, account number ending with 0559. All right, so now we will spin the last one. We'll select the last one for $100 CapitaLand Mall vouchers. Okay, so the last client that will be receiving this, congrats to Kin Tang. Okay, so account number ending with 1020. Okay, so the next 3 will be sort of the better prizes we have for this month. So the next one is actually going to be receiving a Galaxy Watch 7 LTE 40mm. So let's see who is this lucky client who will be receiving this Samsung watch from us. Okay, so for the third prize today, we have congrats, Yi Kwang. I'm not sure if you are watching. If not, then we will also email you, so not to worry. So Yi Kwang, account number ending with 0503, you'll be receiving the Galaxy Watch. Okay, so we'll send you an email to notify you how you can do the collection as well. Okay, so the next one is the second place for this month's lucky draw. So the next one is actually Apple 11-inch iPad. So the next name I spin out will actually be receiving an iPad from us. So this is for second place for today's draw. So let's see. Okay. Okay, so congrats to Kamui. Account number ending with 5362. Of course, we'll contact you on how you can collect your prize as well. And for the grand draw right now, for today, for the first prize, the top one is actually a Apple iPhone 16. Okay, so let me just see who is this lucky client who will be receiving this iPhone from us. Okay. Okay, so Agnes, so Agnes is the lucky one. Account number ending 220. 2200. We will be sharing with you how you can collect your rewards from us. Okay, so once again, I just want to highlight that this is just the first draw because next month on the 7th of August, we will have our second lucky draw. Okay, and how to qualify is that from this period of 1 July to 31st July, currently we are 10 July, right? So that's about 21 more days now. Of course, trading days is a little bit lesser, but just take note that if you are trading in if you are looking to trade SGX listed products, then if you are trading with us, you get to stand a chance to participate in this lucky draw for next month. All right. If not, then we have actually come to the end of today's session. Once again, I want to thank both Billy and Weiren for their wonderful presentation. I hope that the webinar has been insightful to you. And of course, to all the winners for the draw, we'll contact you. And of course, if you didn't win, then hopefully the next one, you managed to get something from us as well. If not, then thanks again for joining us. We are currently at 8:31 right now, just right on time to end today's session. And I'll see you guys for the next session as well. All right. Okay.
Bye-bye.
Cheers and have a great end to your evening, guys.
Bye-bye. Thank you.
Thanks, everyone.